Start from this problem. So this problem relates to planning and operational variance. So this question was asked in June 2016 of ACCA exam, and we'll start from the required. So the required is calculate the total labor rate and the total labor efficiency variance for the last quarter, and then analyze the above total variance into component parts for planning and operational variance in as much as detail as the information allows. Assess the performance of the production manager for the last quarter. So we have three questions here. So the first one is to calculate general variance, and then we have to calculate the planning and operational variance. Okay. So what is planning and operational variance? So when we do this variance, I think we'll explain it better. So it will be like quite quick and easy. So we'll start from the general ones. Okay. Total labor rate and the total labor efficiency variance. So we'll start from the question. Glovco makes high quality handmade gloves which it sells for an average of 180 per pair. The standard cost of labor for each pair is 42. Okay, so the standard cost for each pair is $42, and the standard labor time for each pair is 3 hours. Okay, to make one pair, it costs 42 of labor and 3 hours of time. Okay, so what is the SH? Okay, see, SH is the easiest to find because it requires 3 hours. So that seems to be like quite easy. 3 hours per unit, right? But what is about the rate? See, the rate is they are paying $42, but that is for 3 hours. So how much are they paying for per hour? The per hour they are paying around 14. Okay, so the next one is Glovco had budgeted production of 12,000 pairs. Okay, they thought of selling 12,000 pairs, although actual production was 12,600 pairs. Okay, so is it useful anywhere? Yes, to find out the hours. So hours per unit is 3. Okay, what is the total hours then? 3 hours is required and 12,600 pairs have been produced. So that should give us 37,800. Okay, the next one, 37,000 hours were used to complete the work and there was no idle time. Okay, so the total hours required were, the total hours consumed actually was 37,000 hours. Were used to complete the work and there was no idle time. The total labor cost for the quarter was 531,930. Okay, so this is the total cost. So why has he given the total cost? Because we have to find out AR. Okay, so AR is 531,930. So divided by 37,000 hours. Okay, it's per hour. Right, so we got all the numbers here, so we can find out the variances quite easily. So they want labor rate variance and efficiency variance, so we can get it here. AH 37,000 hours into SR minus AR again SR into SH minus AH. SH is 37,800. So what's the interpretation? So here they should have spent only $14 per hour, but they have paid more. Okay, so this becomes adverse. And here they should have worked for 37,800 hours, but they have finished the work in 37,000 hours itself. So it is favorable. Okay, so that's about the favorableness. So what he is asking next is analyze the above total variance into component parts for planning and operational variance. So he wants like to work out this part. We have to now differentiate the rate variance, okay, labor rate variance into labor rate planning variance and operational variance. Okay, so in these two manner we have to split it, and efficiency also should be split like efficiency planning and efficiency operational. So what is this planning and operational variance? See, planning is what is a mistake that they have done in the planning the rate. Okay, for labor rate planning variance, what is the mistake they have done in terms of the rate? Okay, so if the planning department has made any mistake, that is found out in labor rate planning. Okay, labor rate operational gives you why the variance is favorable or adverse in terms of actual production. Okay, so the blame or credit for labor rate planning variance goes to the planning department. Okay, and the labor rate operational variance goes to the production manager. The same thing happens in terms of efficiency. Efficiency was planned in particular manner, okay, that they have to produce in this much or that much. That refers to the planning department or the top management, and the actual one is the favorable or adverse variance that can be attributed to the production manager is the labor efficiency operational variance. Okay, so the concept is this: planning variance should be taken care, the blame of it or the credit of it goes to the top management. Operational variance alone, okay, the credit or the blame should go to the operational managers. Okay, so in this case the operational manager is the production manager, okay, as it's a labor variance. So let's get the numbers here. So if you see, most of the numbers are very same. Okay, we have AH, SR, and RSR is the only new thing. Okay, in this problem, RSR is the only new thing. So that alone we have to find. And again, in the next one, see, SR we know, SH we know, RSH alone we have to find. Okay, the same thing only we have to again find RSR and RSH. Okay, with that the concept is over. So let's get the idea here and we'll work it out. So let's get these numbers. For this only they have given you the additional paragraph. Okay, so at the beginning of the last quarter, the design of the gloves was changed slightly. The new design required workers to sew the company's logo onto the back of every glove made, and the estimated time to do this was 15 minutes for each pair. Okay, so the RSH is changing. Okay, because earlier the time taken to produce one product, okay, was only 3 hours. Now it is moving to 3.15 hours. Okay, so we can put it like this. So RSH calculation we will put it here itself. So it is 3 point. Should you put 15 minutes? No, we can't put 15. 15 minutes is 25% of the time. Okay, right? Is a 25% of the total time. So we'll put it as 3.25. So 3.25 hours it should take for per product, and totally the company produces 12,600 products. So this will give the hours. So let's get the hours. So this is the hours. So the next one is, however, no one told the accountant responsible for updating standard costs that the standard time per pair of glove needs to be changed. That means the planning has changed, but it has not told to the accountant. So the planning has to be now be changed. Okay. So the revised time is 40,950 is the proper revised time. Okay. Similarly, although all workers were given a 2% pay rise at the beginning of the last quarter, okay, so all of them have been given a pay rise. How much? So normally they are paid how much? 14. They are normally paid 14, and now there has been a 1.02, and now there has been a increase in the wage. So the wage comes to 14.28 per hour, right? So that also we got. And let's see what he says. The accountant was not told about this either. So this also has not been communicated. So that is the reason why we are doing planning and operational variance, because the planned numbers are different and the revised plan is different. Okay. So consequently, the standard was not updated to reflect these changes. When overtime is required, workers are paid 25% more than their usual hourly rate. Okay. See, there's no overtime information given in the question itself, right? There's no overtime given in the question itself. So this statement is useless. Okay. So we'll start from here. So let's get the variance. So labor rate planning variances, actual hours. So we have to get all this information. I'll put the basic ones here. Okay, so it will be easy for us. So we'll start from labor rate planning variance. So AH is here 37,000 hours into SR. So SR is 14 minus RSR. RSR is here, okay, 14.28. So the next one is SR minus SH. Okay, SR is 14. SR into SH. SH is 37,800 minus RSH. RSH is here. So actually we can copy both this and we can again paste it and work. Because why? Because let's see what is getting changed. Okay, first we'll see what gets changed. See, AH is same. Okay, AH is 37,000 hours. RSR alone we have to get. RSR is 14.28. That also we know. Minus AR. What is AR? AR will be here. AR is actual rate is 14.35. 3765. Done. What is the labor efficiency variance? SR is 14. RSH is 40,950. Okay, that is here. Minus AH. So AH is 37,000 hours. So that's it. We got it. We can just paste it and get the answer. Okay, so we got the numbers, and let's see whether it's adverse or okay, we'll first remove all these elements. They are not required now. Okay, are they adverse? Yes, they are adverse. This is also adverse, adverse, favorable. Okay, so we got this. How do we interpret? Okay, see, we have classified into planning and variance. Okay, planning and operational. If we do it in this in another manner, it's quite easy to get an idea. Just wait. So rather than putting it as planning, if I put labor rate variance and labor efficiency variance, okay, it would be quite different. Just check here. Okay, if you split like this, it's quite easy problem. Look here, labor rate planning, because of the changes in planning, how much is lost? 10,360. So this variance, okay, is actually attributable to the senior management because they have changed something. Okay, and this labor rate what to say, operational variance, okay, is a responsibility of production manager. So he has here, he might have not worked properly or something, and because of him working out, uh, because of him paying a higher price, okay, that's why this variance has occurred. For example, look here, they thought it will be 14, but revised is 14.28. 14.28 minus 14.37. 14.28 is a revised one. Even when compared to the revised, the actual is like much more higher. So this blame the production manager has to take. Okay, labor efficiency variance, because of adding an additional small logo. Okay, the hours required is not 37,800, it is 40,950. So this is a mistake of not the production manager, it's a mistake of the senior management. Okay, but even when within that 40,950, which is the revised standard hours, okay, this is what the time they should take to produce. The production manager has been so efficient, he has done the job in 37,000 hours itself. Okay, so this good thing, this credit should go to the production manager. Okay, and what is the most beautiful concept is when you add, okay, when you add both these variances, let's see. Okay, so this gives you an adverse and this is favorable, right? This is favorable. You would have already calculated it somewhere. Okay, let's see, where did you calculate? See, you have already calculated the rate variance and efficiency variance already. Okay, so this total that you get is nothing but labor rate variance total, and this one you get is labor efficiency variance total. Okay, so actually the labor rate planning and operation is just a bifurcation of the labor rate variance. Okay, and labor efficiency variance can be divided into labor planning and operational. So that's about it. Okay, we are just trying to find out who is responsible for what. Okay, so normally labor rate variance, okay, usually production manager is like attributable, but he's not responsible for the total 13,930. He's only responsible for 3,570 of the adverse variance, of the bad variance. So we can't blame him for all the things. And in terms of efficiency, 11,200 has been the favorable. But in reality, if you split into planning and operation, it is 55,000 which is like favorable, which he has caused. The balance adverse is caused by the senior management. Okay, so we shall assess the performance of the production manager now. Okay, so comment. Okay, the production manager has caused a adverse labor rate variance adverse labor rate operational variance of 3570, and his performance is not as bad as indicated by the labor rate variance. Okay, that's one. And two is, I think we can copy this itself and we can amend it. The production manager has caused an favorable variance, favorable labor efficiency operational variance of 55,300, and his performance is more excellent than indicated by labor variance. Okay, number 3, the much of the adverse variance has been caused by the senior management in terms of their planning. Okay, in terms of their planning is where the problem is lying. Okay, so that is the third point. So finally, the manager should be appreciated for his efforts. Okay, so see, they are asking 7 marks. So whatever we explained you here, okay, that should have been like typed. Okay, but as I've already explained you how the variances are split, how the rate variance is split into planning operational, how efficiency variance is split into planning operational, and why the production manager is not like much responsible. Okay, you can also put like this: 4, the total variance caused by the production manager is, okay, add both, you'll get the answer. Add these both, this one and this one, if you add, you'll get the answer. So that comes to 51,730. Okay, so I don't think we need to type, but hope you got the idea. So he's responsible only for this one and this one. So if you want, we can put it in a different color. So this is what the production manager is actually responsible. And if you see here, when compared to the adverse, the favorable seems to be much better. So even when you adjust the rate with the efficiency, still the production manager has worked absolutely better. Okay, he has performed way better here. Okay, and so he's been able to guide his employees in producing more units, okay, in the lesser time, okay. But he has slightly used overtime. He has like paid a little bit overtime. That is why we are getting this 14.37. So that's about the concept. So whatever I've explained, if you type as points, you will get that 7 marks balance. Okay. So hope you guys got the idea. That's about this question. We'll move on to another question.